Hi there, good morning. You're watching Buy Now, Sell Now on ET Now. I am Snehisha. With me is Cheryl D'Souza. This is a show where we'll be taking you through all your stock-related queries. We'll be getting on board our experts shortly, both on the fundamental and the technical fronts, and we'll get a holistic view on all of your queries and what you should be doing with your stocks that are a part of your portfolio or the ones that you wish to buy in the future. But before we do that, let's revisit the markets, Cheryl, and lots of up and down seen in the market today on the back of more tariff news coming in, our own policy, lots of action that's affecting the market today.
Absolutely, a lot of action, a lot of news flow actually affecting the markets, Nehi, and I think we should just get used to it, to wake up to news and to actually look at the markets and the volatility in the markets in trade today. Just a short while ago, about an hour ago, you had the MPC that came out with their policy outcome, and you have 25 basis rate cut coming in for the repo rate cut as well as the bank rate by the RBI. Along with that, you had the change in the stance to accommodative from neutral. Apart from that, what the governor has also said that they've gone ahead, given the global uncertainty and around tariffs and trade, the RBI has cut the GDP forecast to about 6.5%, lowered the inflation outlook to about 4%. They have said that they remain committed to sufficient liquidity in the system, and they're saying the nation has resilient external sector with sufficient foreign exchange to cover imports for 11 months. If you look at the bonds, they are up about 2 basis points. You have rupee that is, however, hovering at a 3-week low. Remember, the forex market is also reacting to what's happening globally, because globally you have the spike coming in the bond yield as well as you have the currency globally depreciating. So that's one of the reasons why the same trickle-down effect is happening on our Indian markets as well. But talking about our markets then, yes, it is not the similar picture that we saw yesterday. Right now, if you look at the advanced decline ratio, skewed in the favor of the declines, but key to note is the fact we are outperforming the rest of the Asia at this point in time. You have Nestle, HUL, Power Grid, M&M, ITC that are holding on to gains, while on the flip side, it is the IT pack that is getting smoked. You have Wipro that is down about 5%, Tech Mahindra that is down, Shriram Finance, Adani Enterprises, Trent, they're all under pressure in trade today. Let me take a look at the sectoral indices, and it is the FMCG pack that's bucking our overall market weakness. 1.6% uptick coming in for the FMCG index. You have autos holding on to a mild bit of green right now, while IT, Realty, PSU Bank, Metals, Pharma, you name it, all of them getting hit pretty hard in trade today, with the broader markets underperforming the benchmark indices by a margin. So that's the way how the markets are looking like at this point in time. Snehi, every day you will wake up, there is a brand new news. Today you have once again a reiteration on the pharma tariffs that the Trump administration is looking to impose, and a major one at that.
Okay, on that note, well, let's welcome our guests on board on this edition of Buy Now, Sell Now. We have Shahina Mukadam, who's an independent analyst on the fundamentals, who's joining us, along with Hemen Kapadia, the technical associate at DRChoksey Finserv, who's joining us on the technicals. Good morning to both of you, and well, let's begin getting our viewer queries and start addressing all of them. Shahina, we'll come to you first. Our queries coming in from our viewer, Mr. Sudhir, who's writing to us from Hyderabad. He's asking if he can buy Bandhan Bank for 3-month holding period now. What are you making of this stock, and do you believe that now would be a good time to buy right now?
Yeah, I think after this huge correction that we've seen, we're seeing a bit of bounce back. Also, in terms of fundamentals, they have sort of addressed a large part of their NPA issues. So I would suggest that yes, you can add, but I would suggest buy it in parts, because what is happening, there are a lot of changes, even as we saw in the latest RBI policy. There are a lot of regulations that the RBI is relooking at in terms of lending. So to an extent, you be careful, but I think co-lending is a positive for Bandhan Bank, and which the RBI is now going to allow. So I would say you can buy at dips.
Coming in for Bandhan Bank, given the fact that yes, you had the RBI also mentioned about the guidelines on co-lending as well. Very good morning to you, Shahina. Good morning to you, Hemen, as well. And just a quick note for all of our viewers: remember, this is a show where we get you answers for all of your stock-related queries. The number is flashing on the top of your screen. Do remember to write to us, and when you write to us, mention your name, the stock that you're looking to invest in. Mention that name as well, along with the buy price, the quantity, the time horizon, in case you've already purchased the stock. In that way, our experts will be able to help you better. Time horizon being the key one for that. Given the fact that you have your short-term, medium-term queries that will be taken to Hemen Kapadia, while your long-term queries we will ask Shahina Mukadam. So let me take the next query then that we have. And this next query that I have is coming in from Amit. He's writing to us all the way from UAE. And he wants to know about Jyothy Labs. Is it a current buy as a defensive play? Shahina, let me actually come to you and ask you about that. Do you think Jyothy Labs is a defensive play? And at this point in time, would you want to add this one into your portfolio?
I'm sorry, I'll just skip this because I'm not too sure. I don't have the details, but I think pharmaceuticals as a whole, you should sort of be careful now. Let's just wait and see what the US government will impose in terms of tariffs.
Hemen, let me take that to you instead then. Jyothy Labs on the charts, how is it looking to you? Do you think it's a stock that one can look at buying at these levels, or you think there are better plays right now?
A very good morning to you, Shell. Thank you for having me on the show. It's the pleasure. I believe we're in the last stages of a protracted decline, Michelle. We've come up from 590 to 300, almost become half. Downside appears limited, has taken support on longer term supports, higher tops, higher bottoms. So I agree with what Shaina said about the US government, but one cannot disregard it. But if I were to disregard it, I think a bounce is underway and a medium term bottom is being formed. So from a technical point of view, obviously, with due caveat of unpredictability with the Trump tariff, it looks like a buy at current levels.
Like a buy at current levels is Jyothy Labs as a take coming in from Hemen. Hemen, coming to you once again, our viewer Satyan is writing to us from Kerala. He holds 500 shares of Ircon International bought at a price of 243 rupees per share in September last year. Now he's sitting at a 38% loss. He saw that the third quarter performance of the company was poor fundamentally, and on the chats he's asking if it looks like a good bet to continue to hold on to.
I know it's rather late in the day, but I think stop loss would have protected his capital to a great extent. Having said that, there's water under the bridge. We are closer to support. This is going to take time to come, and his cost isn't going to come in a hurry. So if he has the patience to hold on for at least 18 to 24 months, I think then it's a hold, because despite this deeper decline, the bigger picture still remains technically copacetic. A view lesser than this time frame, it's a sell-on.
So that's the view coming in on Ircon International. Let's move on to our next query. Shahina, our next query is coming from our viewer, Mr. Tanish, who's writing to us from Gwalior. He holds 10 shares of Hero Moto at a buy price of 4,967 rupees. He's asking if we should exit or continue to hold the stock, or if we should average at the current rate. Fundamentally, how is Hero Moto looking like to you? You know, given everything that we've seen with autos in terms of tariffs, and this sector has also been largely and adversely impacted. What's the take coming in on Hero Moto? And if you had to pick a name in the auto pack, would Hero Moto be your preferred pick?
I would avoid two-wheelers actually as of now. There's a lot of competition. One, two is of course we have the tariff issues, and actually the impact that we are likely to see on metals. So if metal prices come off, components are available from, we had some issue regarding availability of components. So if those issues are not there, I think two-wheelers may just pull through, especially in India, given the fact that we are better placed. At the same time, in the two-wheeler space, I would still prefer a Bajaj Auto over a Hero. If you want to add Hero, or if you want to hold it, then you can hold it with a stop loss of 3,500, and then you could see a slight bounce of year over 1 year period of 3,750. But at the same time, if you want to buy it at dips.
Buy on dips is a strategy coming in for Hero Moto, but if you have to pick a pick from your auto pack, Bajaj Auto would be Shahina's preferred pick. Let's move on from that. And Hemen, coming to you, our viewer Mr. Mohit is writing to us from Ludhiana. He holds 300 shares of Delhivery at a price of 280 rupees per share. He can continue to hold for 3 years. Would that be advisable?
Oh, a small caveat, Sneh. I don't have enough data to give a 3-year view. Okay, it's been there for a year or a few couple of years, but not enough to take that call. Having said that, it's been a perennial underperformer. We remain safely ensconced in an intermediate downtrend. It's probably it's also a longer term downtrend. So I don't see any technical positives as of now. Maybe the picture changes somewhere down the line. So Nope, I don't see any positives. But yeah, since it's a slightly longer term view, I think I can toss that question to Shine.
Well, let's just take it with Shahina quickly. And Shahina, any view on delivery coming in?
I would say it's a hold at current levels. They are doing pretty well actually in terms of, there are some issues right now which they're sorting out, but I believe it's a concept stock and it has got sufficient balance sheet strength to do the M&A activity that they're doing to support growth. So I would say it's a hold.
So whole call coming in from Shahina on delivery. But on that note, viewers, we'll slip into a very short break. Keep writing to us on the number that will be flashing on the top of your screens, and when we return on the other side of this short break, we'll continue addressing all your queries. So you stay tuned, and we'll be right back.
Welcome back. You're watching Buy Now Sell Now on ET Now show, where we get your answers for all of your stock related queries. We have our experts with us. We have Hemen Kapadia to take all of your queries on the technical front, while we have Shahina Mukadam to take all of your queries on the fundamental front. We have this next query coming in from Swati, and she's saying that she has a very basic query. She wants to know whether she should reduce her exposure to the IT pack. She has about Persistent, Coforge and the top 3 IT companies in her portfolio. She wants to know whether she should reduce it to above 50% and instead look at increasing exposure in the FMCG pack for the next 2 to 3 years. What's your take, Shahina? Do you think this sort of a reshuffle in the portfolio is warranted? It makes sense at this point in time, given what is happening to the IT space, on the other hand, what is happening in the FMCG pack and what we're expecting to actually benefit the FMCG pack going ahead?
Yes, I think it makes sense to actually reduce exposure in your IT. It's not that I'm negative on IT, and especially if you're holding the top tier, like for example TCS and maybe one smaller mid cap company in IT, that makes sense. At the same time, it's better to add domestic facing companies to your portfolio as of now, and FMCG definitely stands good. And there we are seeing stocks like ITC doing well in this market. Basically, it is possible that there is a slowdown in orders global in the US market because of some sort of a recession, which actually could impact some of the IT companies in terms of their growth. Anyway, we are talking of a flattish type of growth over the next couple of quarters. So it is advisable to add some FMCG companies. You could also add some ITC hotels also, Indian hotels. So you could diversify your portfolio to some domestic facing companies.
Okay, so that's the take coming in on how the reshuffle in the portfolio would be advisable right now. Let's move on, and Hemen, next query coming to you from our viewer, Mr. Krishna, who's writing to us from Chennai. He's asking if it is worth buying Deepak Nitrite or Maruti Suzuki for long-term investment. He's asking your take on both of these stocks. Between these, which one would you pick, and how are both of these stocks looking like on the charts to you?
Well, frankly speaking, Sneh, Deepak Nitrite has flattered to deceive. It posted a new high and then it's down significantly. The longer term charts have taken a hit, very strong support at 1700. So it's not exactly a great long term buy at this current level. I think the time price retracement will play out some more. So I wouldn't go in for that. Compared to that, I think Maruti is clearly better from a longer term point of view. The correction, the shallow, will still remain an uptrend with higher tops, higher bottom. So between the two, I would pick Maruti. Yeah.
And Maruti is a clear pick coming in from Hemen on that particular front. This one is coming in from Shri, who's writing to us from Bangalore. Wants a short-term view on Bajaj Finance. Does it make sense to go ahead and buy the stock at current levels? Also wants to know, Hemen, that between Bajaj Finserv and Bajaj Finance, which one do you think makes sense to actually go ahead and buy and actually allocate funds in the portfolio?
Options choice, Cheryl, both look good, frankly speaking, but at times like these, it's unprecedented. We have the VIX at 20, should have been 30 actually. US VIX went to 50. Having said that, at such volatile times, I'm not sure if a short-term view is valid or should be, promoted. Longer-term point of view, despite the viewer's query, Bajaj Finance looks like going to 11,000, but it's a longer-term view. Having said that, it's one step ahead of Bajaj Finserv. If you want to play it safe and take the one which is already leading, is Bajaj Finance. If you believe that Bajaj Finserv is fundamentally sound and can play catch up, technically, yes, like I said, is one step behind. but I would prefer Bajaj Finance from a shorter term point of view, but ideally from a longer term point of view. Sure.
So that's the take coming in between Bajaj Finance and Finserv Finance right now is Hemen's pick for a slightly longer term compared to our viewer's query. Let's move on, and Shahina, coming to you, our next query is coming in from our viewer Mr. Jagmohan, who's writing to us from Gurgaon. He holds 100 shares of Sun Pharma and he's asking, since they have high exposure to the US, he would like to get your view on what he should do with his holding right now when it comes to Sun Pharma.
It is dependent on the US market to a large extent, and current levels, you could see some bit of correction depending on what sort of tariffs the US government will announce. You could hold with a hold with a stop loss of say 1,500. Basically, I believe that Sun Pharma has a huge percentage with specialty products, and to an extent, a large part of it, the tariffs will be passed on. So now it will just depend on what exactly the tariffs are and how much they can pass on in terms of, how much they will absorb and how much the US buyer will have to absorb. But I would say that you could continue to hold for now and keep a stop loss because in terms of growth and in terms of new products, they're doing quite well. So it's a hold as of now.
On Sun Pharma, but China, just coming back to you, would you have a similar view for Cipla as well? Because our next query is from our viewer Mr. Dilesh Joshi, who's writing to us about Cipla, and he's asking, would now be a good time to hold for the next 2 to 3 years? So similar view coming in for Cipla as well?
Yeah. Actually, Cipla has got very good products which they are launched in the US, and they're specialty products. So I think to an extent, and a lot of generic products also, which I believe the US government may not really touch in terms of huge tariffs. And specialty products, I think the companies have the ability to pass on the whatever additional tariffs that are there. So to that extent, I would say that pharma companies you could hold, you continue to hold as of now, and let's keep a watch as to what happens, because these are long-term players in terms of pharma, and it's very difficult for the US market to find alternates for some of these products that they are supplying to the US market. So it's not so simple, that the Indian companies will be forced to absorb a large part of the tariffs. They may have to absorb small parts. So I think it is better to hold as of now. India is better placed in terms of, let's say, China or some other suppliers of APIs or other pharmaceuticals. So we should continue to hold pharma stocks. Let's watch actually what happens.
Watch mode, that's what we are on for what exactly happens when you talk about the pharma tariffs. For now, hold coming in for Sun Pharma as well as Cipla from China. Hemi, let me come back to you with the next query. This one is coming from Padma Sivarao, who's writing to us in Bangalore, wants to know about SAIL. If SAIL is a good buy for a period of about 18 months at current price. And apart from that, I want to ask you a question, Hemi, just as a layman who's actually trying to gauge the market, the way how there's such an uncertain environment. We have the entire metal pack that rallied in between, hoping that the Chinese markets will recover, the economy will recover. What was happening to dollar, the fact the dollar index was easing, so maybe things would get better for the metal space. And now you had the tariff and the tariff tantrum playing, really creating a havoc even for the metal space. So how do you as a technical analyst be able to gauge this sort of an environment, give a view for 18 months, especially in such an uncertain environment?
Well, frankly speaking, it's I'll simply term it as mission impossible, Cheryl. Like all the points that you mentioned, all of them are absolutely valid, and what you said makes a lot of sense. I mean, this Trump tariff thing came absolutely out of the syllabus. Like you said, international copper was doing well. Normally, Indian markets follow international copper, and if international copper moves, I mean metal stocks. Having said that, SAIL has been underperforming, even in this bounce, which fizzled out much faster than anticipated. Tata Steel percentage-wise did better compared to vis-a-vis SAIL. On the other hand, SAIL gives decent dividend. So I'd say 18 months at this point in time. I'm not sure if SAIL quantifies as a buy. If I were to buy something from an 18-month point of view, I think I would prefer a bank, maybe a ICICI Bank, Kotak Bank, Bajaj Finance, or if I were to take a contra view and look for something which has declined a lot, even something like a PFC REC makes sense rather than going for SAIL as of now, because like you said, too many ifs and buts okay, the dollar index, obviously, once again, you do not expect tariffs like this, but the dollar index is still, it's just recovered from 101 to 103 and it's down from 110. So uh, it doesn't really make sense. So I'd stick with the stocks that I mentioned earlier. Shell.
Okay, so that's the take coming in on that stock and what you should be doing instead of that. But on that note, we'll slip into a short break, and viewers, we'll once again begin addressing all your queries on the other side of the short break. So keep writing to us on this number on the bottom of your screen, and we'll be right back. Hi there, welcome back to Buy Now Sell Now. Time now to keep it going with all your viewer queries, and let's keep going with them. And we have our experts joining us once again on board. We have Shahina as well as Hemen joining us, and let's talk about the next query coming in. And Shahina, let's come to you because this query is coming in from the consumption space. We have Mr. Sunil Kumar who's writing to us from Bengaluru, and he's asking about your view on Trent or HUL. Which one would be a better pick at the current levels? He wishes to hold either of these stocks for the next 5 years. So from a long-term play, do you believe Trent or HUL could be a better compounder for our viewers' portfolio?
Them are in a similar category in terms of being very good, well-managed companies for the longer term. Both of them have corrected. If you're asking for a shorter, say, let us say a 1-year view, I would prefer an HUL over a Trent. While Trent also has corrected, and over a longer term, yes, it would give you a good return. But I think HUL at current levels makes more sense. You could buy it at current levels, keep a stop loss close to about 2,100, and then you could look for a target close to about 3,500 if you're holding it for a year's period, because after a long period of correction we're likely to see a good bounce, both in terms of volumes as well as in terms of reduction in raw material costs with inflation coming down, especially for food items.
Next query is for you. Hemen, this one is coming from LK Ahuja, and he wants to know which are the 2 stocks that he can buy today. He has given a list of stocks that he's looking at closely. One is Coal India, KC International, IHCL. Which one do you think makes sense to buy right now and then hold on for the next 3 years?
Yeah, Coal India seems interesting the way I see it, Shell. KC and internationally is not bad, but my pick would be Coal India, Shell.
Okay, so Coal India looking better than KC International right now. Shaina, coming to you, our viewer Mr. Rajappan is writing to us from Trichy, and he's asking if he should continue to hold Tata Power. He bought this at an average price of 200 rupees. So he's asking if he should still continue to keep this stock in his portfolio. Tata Power, what's your view?
I mean, yes, the stock has actually rebounded a bit after the sharp correction. I would say you can continue to hold it. I would say hold it with a stop loss close to about 350, and then you could look for a target closer to about 390, 400. It is doing very well in the RE space, and a substantial growth is likely to come in over the next 3 years. So it's a good stock to hold in your portfolio.
So that's the take coming in on Tata Power. Gayatri from Bangalore wants to know about IRFC and IREDA that she's been holding in the portfolio. She bought IRFC at a price of 207 rupees per share, while she bought IREDA at a price of around 270 rupees per share. Wants to know whether she should actually hold them for the long term or continue buying on dips in order to reduce her average cost. What's your take on this, Hemen? Do you think that sort of strategy works, that she buys these counters on dips in order to reduce her average cost? Do you think it makes sense to actually stay put in these counters or look to exit and look at other options right now if there are, that is?
They're not a bad idea, Cheryl, frankly speaking, to hold on. I have more data on IRFC, so I have more comfort level simply because I have more listed history. So yeah, it makes sense to buy IRFC, but if that's the only holding, I don't think one should put all your eggs in one basket. If she's got more than one stock, yes, one can add IRFC from a longer term point of view. Time frame minimum 18 months.
Okay, so that's the thing. IRFC hold, but a minimum of 18 months is the call coming in from Hemen. That's his suggestion. Let's move on from that query. And Shahina, coming to you, Professor Thomas George is writing to us from Cochin. The stock in question is Tata Motors. He holds 2,500 shares of Tata Motors, which he had bought at 900 rupees per share. Of course, he's been sitting on a significant loss now because the stock is even sub the 600 mark right now. So quite the loss is something that our viewer is seeing on his Tata Motors holdings. He's asking what to do now when it comes to this stock. Should he completely book losses? Should he average some right now in hopes for a recovery in the future? And do you believe that this could see the price point of 900 to even at least break even for our viewer anytime in the near future?
It. I doubt that we're likely to see a big bounce back to those levels. In fact, there is a lot of risk actually now. We'll have to see exactly how Tata Motors will respond to the tariffs in the US because quite a lot of their sales goes to the US and they are actually cutting down on their exports to the US JLR, which was going to really impact their top line profitability. Also, China accounts for some bit of sales. So I think we need to wait and watch. I would say you could, if you like, you could partly take part losses and switch to maybe an FMCG stock, a defense stock. There are some available, a large cap bank, so as to protect further losses going forward. So 50% you hold, 50% you book your loss and shift to a sector which is likely to do better in the next 3 to 6 months.
All right, so that's the take coming in on Tata Motors. Let me come to you actually right now, Hemen, and this one is on the big boy Reliance Industries, where you have Shiva Kumar from Chennai asking about Reliance Industries, 90 shares at a price of 1,245 rupees per share. He wants to know whether it's a good time to add right now in the portfolio. What's your take coming in on Reliance Industries, the one that we've been hoping would see a rebound year after year on the technical front, hasn't given that. In fact, has fallen about 13% in the last 6 months. What's your take? Buy right now, and hopefully in the medium term or so, you will see a bounce back on Reliance Industries?
I agree with most part of your statement, Cheryl. One can buy now and expect a bounce. You don't normally see Reliance down for 10 months in a row. Uh, Very strong supports coming at 1120. But once again, keeping that we are in an established downtrend and the volatility in the markets, the markets always volatile, this time there's something more. I would say cut it into pieces, do it something like an SIP because one gets the feeling that it's oversold. I don't think there's too much of downside beyond 1120 as of now. If 1120 breaks, it's going to be more pain. So one can buy now and buy and keep some liquidity to add at lower levels if that is the case. But yeah, currently one can start nibbling.
For Reliance. Let's move on from Reliance and talk about Hindustan Construction Company. Shaina, do you have any coverage on this one? Because our viewer, Ms. Geeta AR, is asking about Hindustan Construction Company. She has bought some shares at a buy price of 44.8. She's asking that the stock price is almost half now. Should she continue to hold or should she sell her entire holding in HCC?
I think she should exit. There were a lot of positives. They were getting a lot of orders and all that, and the stock had risen quite a bit. But now it is half from those high levels, and from current levels, I think there still seems to be a bit of downside. If she wants to hold, she can hold with a stop loss close to about 24. But otherwise, I think it's better to move into some other sector, like we discussed, maybe cement. And Ambuja cement makes better sense in my view if she can convert it to some other sector.
Right. This was coming from Ignatius writing to us from Kolkata. Wants to know about Titan, Hemen. About 20 shares of Titan purchased at levels of 3,655 rupees per share. Ignatius wants to buy more of this one, but at what levels? He's been holding for the last 6 months and he wants to hold on to Titan for the next 3 years. So, do you think right now he should buy at these levels or wait for certain or wait for some more time or some more dips to come in for Titan?
Oh, it's great that he has a longer term outlook on Titan. And frankly speaking, I don't think he has much of a choice. He'll have to hold for long term to make money on that. Stock has been a multi-bagger, humongous multi-bagger. we've been corrective as far as Titan is concerned for just the past not even 1.5 years or so. So currently he can buy with the assumption that 2768 is a possibility, and that's where he can add more. So current levels and at around 2768. Yes, and patience is needed because the longer term charts have taken a hit. So it's going to be some time before it resumes its former glory days. So yeah, 3 years makes sense. Buy current and at 2768.
That's the take on Titan. At least hold this stock for a few more years to see some meaningful return. That's the take coming in from Hemen. But on that note, I'm afraid that was the last stock query that we could fit into today's edition of Buy Now, Sell Now. Hemen as well as Shahina, thanks once again for getting on board with us and addressing all our viewer queries so patiently and so precisely. On that note, we'll wrap it up on this edition of Buy Now, Sell Now. It's a goodbye from Cheryl, me and the team that put this show together. But you stay tuned to ET Now. Markets at noon is up next.